Mr. Big Dog. Oh, baby. Meta stock. Okay, this is big dog. 35% weighting in the portfolio. Absolutely gargantuan position. This position dictates a lot of what happens in the public account. And the great thing is with Meta, it's such a beast company that it ultimately means very good things for the portfolio. Now keep in mind, my cost basis on Meta is very low, $184,000 cost basis, and the position sizing now is $991,000. So substantial, right? Now when it comes to Meta here, okay, I want to show you something. So one is Meta still attractively valued. Forward P at 24, keep in mind analysts are very often too low on their estimates. So there's a decent probability in regards to their EPS estimates. Decent probability the forward P is actually lower than 24 right now. So Meta is very attractive. And if I take you in, so we have projections now on 1000X. We have basically intermediate projections that kind of looks like this. Okay, bull case, base case, bear case. You can run all your numbers. But now we also have our advanced projections, which is much more in detail. Okay, and so let me show you here for a moment why Meta is so attractively valued. So Meta, we could say, 18% revenue growth should be pretty much, I would say, in the bag in 2025. And then we can say that goes down 1% every year over the next few years. And so it just keeps going down. We go down to 15, we go down to 14%. Okay. And let's just run numbers out to 2029. All right. And cost of revenue should go up much less than that. So let's say like 15%, 14%, 13%. Let's go 12%. And 11% here, okay? Now, operating expense should also go up much less than revenue growth. So I would say let's run an OpEx at 10% growth per year on average over the next, few years here, okay? And then we can go ahead and let's say, share dilution. They should honestly be buying back shares. So I don't even, we'll plug zeros into these guys because, when it comes to other one-off expenses, that can be up and down. That can be all over the place, right? And then share dilution, I'm also just going to put zero there because honestly, they obviously give shares out to their employees, but Meta's probably going to buy back a ton of shares over the next few years because they make so much money. So I'm just going to call it a wash in the end, okay? Now, we can say Meta should trade anywhere between a 20p at the very lowest, okay? I mean the very lowest here. 25 is kind of a midpoint that I would say is, that's not like crazy high, that's not crazy low, that's kind of where things should be, okay? And then we can say a 30 on the high end here, right? Which, honestly, if the company grows double digits, top line, bottom line, you could make an argument that the stock should probably be valued even higher than where it's at, right? So let's go ahead and see where we're at. So we are at approximately a share price come 2029 of $1,492 if you're going low range here, $1,853, kind of midpoint here. And if you want to push up toward a 30 PE here, you're at $2,223, okay? So the moral of the story is come 2029, Meta's stock price should be somewhere valued between about $1,500 and about, we can call it $2,200. That's why that one remains a big dog in my portfolio, because at the end of the day, that's just, it's just a very attractively valued stock, like very, very attractively valued. And so that's why I've taken a little profits on Meta, but I haven't really taken much in just like you look at the valuation, you're like, dang, the stock's still going to be a big moneymaker over the next few years. And let's be very clear, if you're buying Meta today at 619, yeah, it sucks. You weren't buying, at $100 like it was a few years ago. But at the end of the day, it's still a moneymaker. That's the bottom line. You can't look back and say, I wish I would have bought this. At the end of the day, you got to look at a stock and say, is this a moneymaker over the next 5 years? If it's a moneymaker over the next 5 years, and it's a substantial moneymaker, which Meta's still going to make a lot of money, at the end of the day, especially if you don't have a position, you got to buy it, right? And so I've tried to offload some shares, but it's hard for me to offload much because I'm like, dude, this stock's going to be $1,500 to $2,200 stock in a few years from now. So, I still got to hold strong on those. Amazon's next biggest position, second of these 16 positions, I call Amazon Mr. Always a Buy. And the reason Amazon's always a buy is this company produces incredible revenue growth year after year after year after year when it comes to this company, okay? So we go ahead and take a peek here. you can count on Amazon growing quarter in and quarter out, year in and year out. And I don't see that changing anytime soon for the next, honestly, decades. At the end of the day, the e-commerce business just gets bigger and bigger and bigger and bigger. People order more and more stuff more and more often from Amazon. AWS just continues to grow bigger and bigger and bigger and bigger, right? And they are Goliath. They're hard to fight against. Their advertising business just continues to get bigger. And at the end of the day, they produce so much in cash flow now that they can continue to build their businesses bigger for the next chapters of growth, or go ahead and buy out other businesses, which they own a lot of other companies like Whole Foods and Zappos and a bunch of other random brands, Twitch. They own a bunch of companies over time, right? But we're still very early days in the earnings per share story in regards to Amazon. Remember, Amazon still has very low actually net margins on this company. They got a long way to go. 10% net margin on this company, I think long term their net margins are going to be more in the 15 to 20% range. So when it comes to Amazon, this company is another one of those that remains a buy. You always buy Amazon. It's never not, there hasn't been a time period in Amazon's history as a public company where the stock has not been a buy. And it remains true to this day. Amazon stock is a buy today. It was a buy yesterday. It was a buy last year. It was a buy the year before and the year before and the year before and the year before. Every year Amazon's a buy. Someday that will change, but it's not right now. I can tell you that much. Third stock of these 16 stocks is PayPal. 7.47% of the portfolio. We're up $19,000 so far in PayPal. I call it Mr. Buyback because this company is set up in a position where they're going to be able to buy back a ridiculous amount of the company over the next few years here. And the reason being is the market cap's very small in this company. It's around a $70 billion market cap, not very large. But they're doing buybacks. They're set up to buy back like $5 billion of shares a year. For my opinion, they'll probably buy, I think they'll probably buy between $3 billion and $5 billion worth of stock every year for the next many years. Probably at least the next 5 years. And so they're going to be able to take massive amounts of shares off the market. Additionally, we should see their net income continue to go up for PayPal. And so at the end of the day, PayPal is very attractively valued. And if we go ahead and we take a peek at PayPal's PE ratio here, forward PE, it's not like it's high. It's a 14 forward PE on this stock. It's a 14 forward PE. So PayPal is going to be a big money maker. And they just continue to buy back shares. I like PayPal a lot. Not the fastest growth company. It's not some company that you're going to see grow in revenue 20% a year or something like that. It's not that sort of company. But as long as they can grow revenue in that 5 to 10% ballpark per year for the next number of years, their net income should go up probably 10 to 15%. And then their earnings per share should go up probably closer to 15 to 20% because they'll be buying back a bunch of shares. So now you see how this story gets very, very exciting, okay? PayPal. Number 4 of these 16 stocks is AMD. Advanced Micro Devices. I call it Mrs. Insane Risk Reward here. The reason AMD is such an incredible risk reward, and I've talked about AMD a lot over the last couple months, this is a stock I'm banging my hand on the table right now. I think people will look back at 2025 and be like, why was I not buying AMD? And it's not like they're going to be looking back 10 years from now and thinking that. They will be, by the way. But it's going to be more sooner rather than later. I think even in 2 or 3 years from now, they'll be looking back and they'll be like, why did I not buy AMD back in 2025? I think that's the way people will look at it. And here's the deal with AMD. It'd be one thing if AMD's forward P was insanely high right now, but AMD's forward P is in the 20s. In the 20s for AMD, right? And this company has, I think they're going to grow at a 20% plus clip revenue for years to go in the future. And some years I think they're going to be growing far faster than a 20% clip. So AMD, man, that's a table pounder for me right now. I continue to buy shares of stock. I buy their stock almost every single week right now. And it'll remain like that for at least probably the next couple months here. So yeah, I love AMD. It's 7% of the weighting of the portfolio, but don't be surprised if once that one goes on a run, it ends up growing to become like 15% of the portfolio or something like that. AMD will be, in my personal opinion, a $300 to $500 stock, if we look out 3-4 years from now, right? I've run my projections using 1000X on this company, and it's a pretty good story here. Number 5 of 16 is Tesla Maesla. I call it right now, Mr. It sucks right now. Yeah, and the reason Tesla sucks right now is pretty obvious. We all know why that is, right? And it's hurt their business incredibly in the United States of America. It's hurt their business substantially, even more so in Europe. And it's, in my opinion, even affected it negatively in China as well. So, and then their energy business, I think we're going to see smaller growth rates in that business as well. I think the growth rates are going to start going down pretty immensely over the next couple of years. So, and the whole robotaxi thing, that's still several years out in terms of any sort of meaningful business there. So Tesla, it just sucks right now, man. I don't see it changing in the short term. A year out, 2 years out, 3 years out, that might change, but stocks just sucks right now, and it is what it is, right? It made me so much money back in the day. The thing is, I almost hold these 777 shares nowadays almost as like a ceremonial position, because it's such a small amount of money compared to what I took for profits. It's kind of just like goodwill, I guess you can say. That's kind of why I hold Tesla these days. It's kind of just more of a goodwill hold. I'm like you made me so much, I'm just going to hold you down, okay, Tesla, okay? Hey there, it's Jeremy. I hope you really enjoyed that clip here today. What I'm showing you right now is 1000xstocks.com. This is a specific software that has been designed to save you time. It's a one-stop shop for long-term investors to know how the company is doing, listen to what management has planned for the future, and compare companies next to each other. Which big tech is the most undervalued? Is that small cap company you heard of actually worth investing in, or are there red flags? Get the front row to the conference call, be able to access the management, which information is right to make an educated decision. Get all that information through 1000xstocks.com. You can access that through the description area. You can apply for access to 1000xstocks.com, or you can go to 1000xstocks.com. Well, what did I buy? I bought $60,000 worth of stocks, and here's what I bought. I bought $32,000 plus of AMD here today. I bought $3,700 worth of Honest stock here today. I bought $5,600 worth of Win stock here today, and about $18,000 plus of Shopify stock here today, okay? All four of those stocks are going to make some incredible upward moves in the next bull run. Now, it's debatable whether the bull run starts this month or whether the bull run starts in 6 months or 12 months. You could debate that all day. But in the next bull run, all four of those stocks are positioned to absolutely make some incredible moves. When I look at what's happened with Honest's numbers, when I look at what's going on with AMD's business model for the next several years, when I look at Wynn Resorts and how well positioned that company is, and especially come the Middle East property when that's done, and then Shopify is always a buy. Like every dip on Shopify stock since the company went public is always a buy, and that remains to be a buy to this day. Okay, all dips are buys on Shopify. And so now the other thing I believe with all of these four stocks is I actually believe there's limited downside left in all four of these stocks, right? If I had to pick which one has the most downside potential, I would say Shopify. And that's if the NASDAQ got hit a lot harder. Let's say NASDAQ goes down another 10, 15, 20%, which once again, that might not happen, but let's just say it did hypothetically. Shopify has a furthest to fall in regards to that. Win stock's actually holding very well right now. Honest stock looks phenomenal. Phenomenal setup for the next several years. And then AMD is set up incredibly well. So that was a pretty heavy buy for me in regards to AMD here today, $32,000 buy. And AMD, even on daily today, like AMD outperformed the NASDAQ. Like I'm watching AMD consistently not get hit that hard. Like it seems like AMD was around $100 a while ago. And it's still around $100 roughly, right? 97, 100, somewhere around there. So it seems like it's starting to get really hard to get AMD down anymore, and that one's just going to make it. The next bull run, the move in AMD is going to shock people in the next bull run. That's all I'll say about that, okay? Hey there, it's Jeremy. I hope you really enjoyed that clip here today. What I'm showing you right now is 1000xstocks.com. This is a specific software that has been designed to save you time. It's a one-stop shop for long-term investors to know how the company is doing, listen to what management has planned for the future, and compare companies next to each other. Which big tech is the most undervalued? Is that small cap company you heard of actually worth investing in, or are there red flags? Get the front row to the conference call, be able to access the management, which information is right to make an educated decision. Get all that information through 1000xstocks.com. You can access that through the description area. You can apply for access to 1000xstocks.com, or you can go to 1000xstocks.com. Next up here, why I feel great. I have a few reasons why I feel great and why I feel very sanguine and calm and chill and all those sorts of things, okay? Reason number one is I have more income than expenses. I've had more income than expenses basically almost every single year since 2008. Since 2008. Always more income than expenses, right? And the only time I didn't was when my first son was born. When my first son was born, essentially I took off a year. And I just chilled and did stocks for a year and didn't do anything work related, didn't have an income. So during that particular time, that's the only time since 2008 where I did not have more income than expenses, was during that like 1 year, a little over 1 year I took off and was just chilling. But outside of that, I always have more income than expenses. Same thing to this day. It's always been that way. And so I'm always ready to buy. I'm always ready to buy. And so for me, as a long-term investor, I'm not planning on retiring tomorrow. I'll also not plan on retiring next year or the year after. Like I love working, I love doing what I do. And so I don't plan on dipping anytime soon. I don't need, my ego's plenty big, okay? My ego's plenty big. I don't need my portfolio to say a certain number to inflate my ego any more than it already is. I'm good as far as that goes. I have plenty of confidence. I don't need my portfolio to say a certain number. So at the end of the day, I would rather have stock prices cheaper short term than higher. Do you think I would have rather buy AMD today at $97 a share? Or would I rather bought AMD at $197 a share? I'd much rather buy a 97 because I believe AMD is eventually going to be a $300, $500 stock. So I can buy a lot more shares at 97 than I can at 197 or 297. It's a simple game. More income than expenses. If you have more, I always tell you guys, what's the number one key to being a successful long-term investor? More income than expenses. That's half the battle, man. That's more than half the battle. Then from there, you can start worrying about P ratios, income statements, balance sheets, cash flows, how all this stuff works, right? Understand SWOT analysis, strengths, weaknesses, opportunities, threats of a business. You can play that game once you have this accomplished. But you gotta have more income than expenses. If you don't, what are you doing? Unless you're like me and you took a year off or something like that back in the day, right? What was that, like 2015 I did that, 2014? Reason number two that I feel so comfortable and feel great is I'm in beast companies. Like you look at my portfolios, they're loaded with beast companies. What is a beast company? Companies that have insane profits. You know, many of my companies are throwing off hundreds of millions of dollars of profit or billions of dollars of profit every 3 months. Incredible profitable companies. If you look at many of the biggest stocks I own, they all have beast balance sheets where they're loaded. Many of these companies are loaded with, hundreds of millions or billions of dollars of cash and short-term investments, long-term investments. Some of my companies have tens of billions of dollars. They have beast balance sheets. It doesn't matter what. Throw a recession at it, throw inflation at it, throw deflation at it, throw Trump at it, throw tariffs at it, throw whatever. Elon, Doge, blah, blah, blah. They're going to make it through just fine, out to the other side. And all those other things are there today, gone tomorrow, right? And then my companies are going to have growth regardless of the economic environment. You could say, well, if it's a bad economy, they might grow less. Fair. But many of my beast companies, my biggest investments, they're going to grow regardless. It's just a question of how strong are they going to grow? Are they growing at a 20% clip, a 30% clip, a 40% clip, right? 10% clip, 5%? That's the question. How strong is the growth? Okay. So that's reason number two. Reason number three that I feel great is GVD. My strategy for investing and building out a portfolio and building out a great portfolio is growth, value, dividends. I have growth stocks, I have value stocks, and dividend stocks in my portfolios. I'm not just a one-trick pony. I'm not just a boxer that can throw a haymaker, and if I don't land the haymaker, I'm screwed. Nope. And so that allows me to do well in any environment. Whatever the market, like throw a bad market at, and I'll be just fine. And I'll make it out to the other side and be just fine. And meanwhile, if stocks aren't going up, right, guess what? My hedges are probably doing good if I have hedges on the market at that particular time, as I recently had Toll Brothers hedges, what was that, a month or two ago? I had the Walmart hedges, I had Costco, those made me great money. But then my value and dividend stocks, they pay me out dividend money. Dividend money, income into all my different portfolios. Just, thousands and thousands and thousands of dollars of dividend money just coming into my portfolios. And so then I'm able to take that money and invest it into companies while we're in a correction or a crash. Oh my gosh, you gotta be kidding me. It's perfect. This is how you set up a beast portfolio to make it through anything. Now, it doesn't just happen overnight where you just build out a beast portfolio. It happens over years, right? And many of my portfolios I've been building for many, many years. And that's how you do it. So the way I'll put it to you like this. Let's say I live in a town. And then a lot of people come into my town and it's sunny out. And I'm like, I lived in this town a long time. Like, it's been sunny quite a bit. And you know what? I see those clouds over there. I've seen those clouds a million times. Rain's coming. So I start going around the town and say, hey guys, I understand it's sunny right now and it looks great, but rain's coming. Like, get ready, get inside. It might be even a tornado. Like, get prepared here. Get in the bunker, maybe get some umbrellas out, something like that, right? And everybody's like, no, we're good. I'm like, listen. I lived in this town a long freaking time, okay? Listen, like, get ready. The rain's coming. I think there might be a tornado coming. I lived here a long damn time. And the new people of town, like, shut up, dude. I'm out here in the sun. I'm sunbathing, baby, okay? I don't need to get ready for that. I'm like, okay, sweet. I'm going to go get my umbrellas. I'm going to go get in the bunker. Have fun, right? And then it's raining. It's awful. And people are like, oh, this is never going to end. And I'm like, no. We got to get ready. It's about to get sunny again. Like, get ready. I'm going to go put my shorts on and a t-shirt, baby. We're going to go catch some sun out here. And they're like, no. It's raining. It's bad now. I'm like, no. Like, it was raining. The sun's coming out now. Get ready. That's how I feel in regards to stock market sometimes, where, it'll look perfectly sunny. And I'm like, okay, I'm going to be buying these dividend value stocks, these hated stocks here. I'm going to be hedging. And everybody's like, no, we don't need to do that. It's only sun right now. And I'm like, okay, do what you want to do, right? And then, guess what happens? You have a situation like 2022. You have a crash of the market, right? And I'm like, yeah, I know it looks rainy right now. I know inflation numbers are bad, but the sun's about to come out. We're going to have a lot of fun. And guess what I was buying? All those growth stocks and made fortunes on that. And people are like, no. It's going to get worse. It's going to get worse. It's going to be 20 tornadoes instead of one tornado, right? And I'm like, okay, I lived here a long time. You do what you want to do. I don't care. Do what you want to do. I'm just here to tell you what's going to happen. Just do what you want to do. There's a great book that's on the side of my bed. And usually I don't have it up on the stand like that. Usually it's in here. But it's called Mastering the Market Cycle by Howard Marks. Very good book. And the best part of that book is not trying to figure out exactly when a market's going to peak or when a market's going to start a next bull market. I don't think that's the most important part of that book. The most important part of that book right there is understanding that the market goes through ups and downs. It's a roller coaster ride. It's full of emotions. It's full of opinions. It's full of this and that, right? It's full of Wall Streeters being sheep and following each other around. It's full of a whole mess. But market cycles are natural, and they happen. Bear markets, bull markets, kangaroo markets, all part of the process. And the other thing that I think that book really teaches you is none of it's lasting. Bull markets are not lasting, bear markets are not lasting, kangaroo markets are not lasting. Now, bull markets last far longer than bear markets, true. But it's never forever. That's the thing. And you got to understand eventually that trend breaks, and then you go through a new market cycle, a new market dynamic. And the same thing happens across industries. And so I think that's a great book for reference to really understand on a deeper level. The market goes through these things, okay? It's part of the process. You can't fear it, just understand it's part of the process. It's no different than the sun rising and the sun setting. The sun rises and the sun sets. It's part of the process. It's daytime now, and in a few hours, guess what it's going to look like? It's going to look black outside. And I'm going to be able to see the stars. Because that's part of the process. And then, 10, 12 hours after that, guess what's going to happen? The sun's going to be out again. It's a process. It's the same, it's a pattern. It repeats. So the same thing happens in the stock market. So you got to figure out, do you want to focus on the long term or you want to focus on the short term crap that's going on here today, gone tomorrow? It's up to you guys. Do what you want to do out there, okay? But if you're ready to take investing much more serious and you've been taking it, you want to apply to join a private group, that's pinned comment down there, fill out a form. We'll see if we can get you access to that. This week, let's get rocking and rolling. Like, why do we want to screw around and wait? Like, let's get rolling with this stuff, guys, okay? Much love and have a great day.